Good morning, everyone, and welcome to the BTCS Fireside Chat. My name is Walter Pinto, Managing Director at KCSA Strategic Communications, and I'm joined today by Charles Allen, CEO of BTCS. I'm looking forward to discussing with Charles the company's progress during this very active and transformational period and what the future holds. But before we begin, I want to touch on a few highlights during the most recent third quarter the company reported. First, the company did report record Q3 revenue driven by growth across validator operations, block building, and DeFi activities. Next, the company also continued to expand its ETH accumulation strategy, resulting in meaningful year-over-year increases in both ETH held and ETH per share. And lastly, the company made steady progress across its integrated DeFi and TradFi initiatives, as well as within its three primary revenue streams: Builder Plus, Node Ops, and Ethereum. We're going to dig into each of these key areas in more detail during today's conference call. But first, let me remind everyone that statements made today may be considered forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995 and applicable securities laws. Actual results may differ materially from those expressed or implied due to risks and uncertainties described in the company's filings with the SEC, including its periodic reports and investor materials. BTCS undertakes no obligation to update forward-looking statements except as required by law. We appreciate everyone joining today. At the conclusion of our fireside chat, we will open the floor to live Q&A. For those who have not submitted questions previously, please send them through the Q&A function at any time. If we don't get to your question during today's session, please email us at btcs@kcsa.com. Please note this call is being recorded on Tuesday, December 16th, 2025 at 11 a.m. Eastern. A replay will be available on BTCS's Investor Relations website following the conclusion of today's discussion. With that, let me welcome Charles to this morning's Fireside Chat. Charles, it's always good to see you. I really appreciate your time this morning.
Yeah, thank you so much for hosting this.
Appreciate it. And I think a great place to start, Charles, and I think it's top of mind for a lot of investors, is the market in general. We've had a pullback in prices pretty much across the board. And it started more or less with the liquidation of Bitcoin on October 10th, in my opinion. I get the sense that investors, especially retail, they're looking for some sort of guidance and perspective from thought leaders on the state of crypto. What's your point of view? I mean, how do you look at where we're at currently? We're heading into the end of the year. How do we look at what we should look forward to in the space in 2026?
I think we typically see the year end as a weaker time for crypto historically, but more importantly, if you just zoom out, you really don't have to zoom out that far to see how well crypto is performed, and whether that's Ethereum, whether that's Bitcoin. Digital assets have done phenomenally well over the last few years, over the last decade, and so they are a volatile asset class. And I think people tend to be very short-sighted and panic when they see the price drop and not really look at, what was your entry point? And so I look at the more fundamentals underlying some of the things that are happening on the regulatory front and the institutional side where capital is flowing. And that tells a very different picture compared to the kind of short-term volatility we're seeing in prices.
I completely agree, and I think anyone that looks at the market, these technicals don't go straight up in a linear line, and so volatility, just kind of occurs in the market. But now specifically to your strategy, and I'm fully realizing that you get this question all the time, but why ETH? There are a lot of crypto assets. How do you kind of think about ETH and on a comparative basis to other technologies and other cryptocurrencies?
So I would break that question into two parts. So I think the first is we like ETH because it's a productive asset. So there's a whole digital economy that can be built around Ethereum. It's the rails of the tokenization of real world assets, and so that differentiates it from the Bitcoins, the Litecoins, the any token that's basically its sole purpose is a store of value. And so from that perspective, we are very bullish on smart contract based blockchains like Ethereum. And then, why ETH in comparison to the other blockchains that are smart chain based, and that really comes down. I think the big ones are, BNB, which is a fork of Ethereum, and Solana. And our viewpoint on Ethereum is really twofold. One, the price performance once you zoom out has been has outperformed everything. It's outperformed Bitcoin if you just zoom out to I think like 2017. And two, the utility is phenomenal. So obviously Bitcoin doesn't do anything apart from being a store of value. Ethereum has a tremendous use case. There are billions and billions of dollars of stable coins built on top of and settling via Ethereum's L1. And so if we compare Ethereum to, I guess the next kind of runner-up would be either BNB or Solana, and it comes down to the blockchain trilemma, right? Where you can have speed, security, or decentralization, but you can't have all three at once. And you kind of have to pick what is the most important thing that you want when you build on a blockchain. And Ethereum really, decentralization and security are first and foremost. And while speed is something that's on the roadmap, um, it's not core. It's not the most important thing. It's not something that's going to get sacrificed for decentralization and security. And I think that's what makes it most attractive. I think that's why most of the institutions are building on Ethereum. That's where most of the developers are. And so I think that's what sets it apart. It also has brand name as the number two blockchain for 5+ or more years. So you
Mhm.
put those together, and it seems like the logical place to be focusing for an infrastructure company.
Understood. And as I mentioned, I mean, Q3 was a breakout year for you all, kind of record performance across the board. I look at your performance in, kind of revenue growth, but also your ETH accumulation. Just first on the revenue growth. So you delivered record revenue. Talk us through kind of what were the drivers in Q3, and then obviously we're going to report Q4, but that's not till March-ish timeframe. How do we think about Q3 and how do you think about, the future without giving, specific guidance?
Yeah. So, obviously Q3 was huge. We were close to 5 million in revenue for the quarter, up from about 2.8 million for Q2. The the big jump was in we had growth in all three of our operating segments, block building, node ops, and then Imperium, which is new. I think what's most interesting is the 85% of our revenue is not coming from blockchain infrastructure staking, right? Node ops. It's coming from Builder Plus and Imperium, which is really something that differentiates us from our peers. As for what I think is going to be most interesting is Q4, right? Despite the price pullback in Q4 compared to over the Q3 and over the summer, we raised 80% of the funds the total funds raised in the last decade happened in Q3 this year. And so when you look at that, we obviously didn't raise all of that at the beginning of the quarter, and those funds weren't deployed and being used in our strategies. So, Q4 we'll have full deployment. Obviously, I can't say more than that in terms of what it means for revenue, but we're pretty excited to see, the first full quarter that'll incorporate putting the funds we raised to work.
Good. And so that covers kind of the revenue side, but then you also have the ETH portfolio. The last quarter grew significantly. How do you think about the opportunity to acquire more ETH? When's the right timing? How do you do that? How should investors kind of think about your portfolio of ETH going forward?
Yeah, you're correct. We grew from about 15,000 ETH at the end of Q2 to over 70,000 ETH in Q3. That was primarily driven by the fundraising we did. I think what's interesting is our average price of ETH is about just over 3,000. So that's substantially better than most of the other companies that pivoted in, and that's because we've been acquiring and accumulating ETH since God, I don't know, 2017 maybe. I mean, it's been a while. This is not a pivot into the strategy for us. It's been more of a refinement of our blockchain infrastructure strategy and building upon that. So our goal is to, continue to expand our Ethereum holdings. It's really, we're not really a DAT as most people would like to, throw us in that bucket. Our Ethereum is a kind of input into operations, and it's a byproduct of what we need to do to be an operating business. And I think what really um, exemplifies that is if you look at us compared to what others would deem, digital asset treasury companies or peers, on average between FG Nexus, MicroStrategy, Eatzilla, SBET, and BMNR, they're around 0.4% revenue to total assets for 2025. We're about three times, or 3%, not three times, about three, a little over 3% revenue to total assets. So if you kind of look at that in a chart, we're clearly an operating company that's going to drive scalable revenue through operations, not just, hey, we're going to buy a bunch of ETH and hope it goes up.
Yeah, and I think that's an important point, and something of differentiation. You're not you're not new to this game. I are you you're the company that has been public in the crypto space the longest, right? Or one of them.
We're the oldest public crypto company in the world.
So
We went public in February 2014, so we've had, the privilege of battling the SEC for a decade, until recently, where you can actually operate a legitimate business within the crypto, currency um, industry and not have the government try to put you out of business. So it's been a nice relief in 2025.
yeah, and I agree with your comment. I think there's been a surge of digital asset treasury companies with no real operations here. Here you are with with an ETH portfolio that many believe will be valuable over the next 1 to 5 years and continue to grow in value, but then having an operating business that obviously you're executing on that, you just had record revenue. I think that's very different versus a lot of the companies that have recently announced transactions, in the last couple of months.
No, it's very different, and we have a huge head start
No.
in comparison to many of the peers or comparables that are pivoting into the space, because there's a lot that goes into actually building a crypto native operating infrastructure company, beyond just, hey, let's buy some ETH, right? There's a lot of expertise that's going to take time to build if you just pivoted in.
Yeah, I completely agree. And then just digging in a little bit further on your three revenue streams. So you got Builder Plus, you got Node Ops, you got Imperium. How should we think about growth across each of these platforms, near term versus long term? And where are you guys making the most investment in the build out of those revenue streams?
So if you look at, I think we put a chart in this in our most recent deck. Node Ops is probably the most stable, right? It's staking where we run our own infrastructure. We're not only a solo validator node on Ethereum, but we're also a validator node operator for Rocket Pool. So that increases our rewards by 30 to 40%. And then we vertically integrate our Rocket Pool nodes with our block building. So all of the three business lines are connected and have ways that we can potentially integrate them to extract more value. In terms of growth, to your point, Node Ops is probably lower growth. It's capital intensive, but not in the way a Bitcoin miner is. We're not buying machines. In order to grow Node Ops, we basically have to acquire more Ethereum and stake it. That is not going to be the revenue driver for the business on a going forward basis, but it's going to be important to how we integrate our operations. Builder Plus is probably the biggest driver of revenue growth, albeit lower, low margin compared to the Node Ops. And I think the third, which we just kind of went into in Q3, Imperium, is what we're most excited about. And I'm going to be very vague in what we say here, because um, it's not it's about the proprietarily what we do that differentiates us, and we don't want kind of everything we do out in the market. But engaging in the DeFi ecosystem to drive scalable revenue is really the goal there. Right now, we're doing that through Aave, but we're looking at a lot of other platforms and ways we can do that internally, and then connect that with some of our other business lines. So I think that's going to be what we're looking at in the future is Imperium, block building, and then squeezing the lemon as hard as we can on Node Ops in terms of keeping costs down and maximizing our rewards.
Yeah, so it sounds like the expectation, potentially revenue continue to increase, but then you get it more efficient and margins expand over time. And that makes total sense. But one of the other things too that we should talk about is, I think, and I think everybody realizes this in the crypto space, these treasury companies, you need to have financing flexibility and optionality. And here you are, you have, Aave borrowing, which it probably makes sense to explain that a little bit more. You have convertible notes, you have a large ATM facility. The important thing for you is you have optionality, in the best interest of your shareholders. But how do you think about capital deployment? You have a strong balance sheet currently, but balancing kind of growth with dilution, and how do you figure out what's the best way to accelerate, growth with more funding?
So I think capital formation is probably the most overlooked component of what matters for a public company. And I've seen this, time and time again that you have a CEO that's, a biotech CEO and they take their company public and then they go get crushed in the public market because they have no idea how to finance their business. So, by way of background, I did investment banking for 10 years in the focused on the lower middle market and microcap sector. And so know that this space very, very well. And it's just filled with landmines. And so our capital formation strategy is really about protecting our common shareholders and creating value for them. And there's three ways we do that. So we have an ATM, which is the lowest cost of capital you can get for issuing equity, straight equity. It's much better than a registered direct. It has warrants. And if you have a good trader, you can really minimize dilution while raising capital. So that's been core. We raised about $140 million off our ATM this year. The next is we rely on convertible notes, but to a small extent. So we've done two convertible note deals, one for $7 million in, I believe, May, and another for $10 million over the summer. So $17 million total. Those convertible note deals are about 40% less dilutive than had we used the ATM. But you have to be very careful with those. And I know I've looked at a lot of other public companies. There are no toxic features to that convert. Either it's gonna convert out, it's gonna get repaid or refinanced, but it does not. The way we've structured it, it should not blow up the company. And I've seen a lot of convertible note deals where the investor actually makes more money when the stock goes down than they would if the stock goes up. So that's something that is, I think, the most important thing to look at is what do the preferred structures look like in a public company? What's the convert, and how am I as a retail investor going to get crushed? And so that's where I think we really shine, and it's something that nobody really looks under the hood at. The third leg of that stool is accessing capital via DeFi, and that is super exciting. We're the only public company doing that. And so what we do is we borrow on Aave. It's a decentralized lending and borrowing platform. We're able to post our Ethereum as collateral and borrow against that in an over-collateralized loan. The interest we pay on that is a variable price. Right now, I believe it's under 5%, but it typically is under 6% per year. And we don't actually have to pay it. It just accumulates in USDT, so that's a stable coin. And then when we want to withdraw our capital, we have to repay the balance of the loan plus all accrued and unpaid interest. And what's amazing about that is we're able to literally borrow in under a couple minutes. So if I wanted to borrow $10 million, I could literally do it while I'm on this call. And we have approval process and there's some structure behind it for controls, but I don't have to pay a banker's fee. I don't have to hire lawyers. I don't have to draft documents. I don't have to do UWCs for senior debt. And so it is an amazing funding mechanism on the debt side. It's really one of the lowest cost of capitals. And the fact we're the only company in the public markets right now doing this is kind of crazy. And we've been able to put on very low cost leverage to the business to grow it, which has helped scale revenue and grow our balance sheet with Ethereum, which is something you're just not going to see in any other public company, at least not yet. And so I think when you combine those three things, an ATM, above market converts, and DeFi, it's really a unique capital formation strategy.
I agree. It's really interesting. And before we open, we already received several questions from our audience. If you do have a question, please submit it via the Q&A function. Last question for me, Charles. Again, we're at the end of the year. Everybody's kind of gearing up for 26. What are some of the operational or strategic milestones that investors should expect for the company next year?
So a big focus is going to be leaning into Imperium, and that's where, and we're going to build that in-house versus try to acquire another company. I always get that question, so why don't you just go buy a team that's doing that? It's much more efficient for us from a capital deployment perspective to hire and build internally. We have, frankly, an amazing team compared to most other uh, companies in the space. We're crypto native. We didn't pivot into this. And so, half our team are developers. So really, to your question of what does next year look like? Well, for one, you're going to see Q4 with full deployment for the funds we received. And then Q1, we're going to be hopefully leaning into Imperium more. And so that's all, publicly available information. But I think that's what's exciting for us. I think the challenge we face is we get thrown into this DAT bucket that we're just like why are we different than a BMNR, which really has no operations. They're just hoping the price of ETH goes up and has a huge amount. And so how do we differentiate ourselves? And that's just market awareness, and it's going to take time. And our hope is if we deliver on the numbers, and we have been so far, in management's opinion, we've had record revenue in Q2, Q3. Can't speak to Q4, but if we keep delivering on the numbers, at some point, people should notice that we're not just an ETF with staking. We're much more than that. And so that's kind of the goal for next year is deliver on the numbers and try to gain attention from the market.
Well, I appreciate that, and that's very well said. Listen, you have a very interesting and timely company, and I think, very differentiated when you look at the space. So congrats on all the success, and we did receive some questions from our audience. And our first one's interesting, and we didn't cover it today, but maybe it's worth spending a few minutes, is on the dividend that you all announced. This question is, with ETH per share increasing significantly, do you anticipate further loyalty rewards or dividend style initiatives in the future?
So we were the first to do the original dividend. I think that was in 2021 in Bitcoin when we kind of were pivoting out of Bitcoin into Ethereum. We did the first Ethereum dividend in, I guess that was over the summer. And it's going to be a one-time event when we do these. We've done it twice, actually three times if you include the Series V preferred stock distribution to our shareholders. Until we're highly profitable, we're not going to look at reoccurring dividends. It just doesn't make sense. We need to be reinvesting the capital back into the business. We doing one-off special dividends becomes very interesting when we start to trade at a discount to our um, book value. That happened years ago, and we did a dividend in Bitcoin, and the stock went up about 140%. We raised money at 100% premium to where the stock had been prior to announcement. And what essentially happened is, at that point, we were a 30, 40 million market cap company. We had $250 million in failures to deliver in one day. On a day we traded $500 million, and it just doesn't add up. The SEC should be investigating this as to what, did market makers make up fake shares? Were there legal naked shorts? It's really not on the agenda for the SEC. Hopefully it will be. But that we had a hunch that there was, um, you know, uh, bad dealings going on in our stock, and we decided to take corporate action that if there was anything that was going on that shouldn't be, it would flush it out, and it did. With the Ethereum dividend, it was the same thing. Like let's try to get our valuation back to normal. We also have a buyback in place. We have a $50 million buyback that's good until canceled, and as disclosed in Q3, we've repurchased about $3 million of shares. So if you look at our ATM, we sold about $140 million in average price. I believe it was 560, and we've repurchased, excuse me, about 530, and we've repurchased about $3 million at 460. I mean, obviously hindsight's 2020. I would have rather been buying back at this $3 range, but it's still a decent spread.
Yeah, but it shows your commitment to supporting the stock and investing when you can. Obviously, public companies have quiet periods, but I think that shows a lot. One, strength of the balance sheet, but then two, but buying the stock when you think that it's undervalued. And actually, we do have one question in regards to that, which is one of my favorite questions: is why do you think the stock is undervalued at these levels?
Um, I think it's a couple things, right? You have as much as I would like to believe that stocks are valued on fundamentals, that's just not true, right? Maybe 30% or 30 to 50% of a company's value is obviously a big range, is probably driven by fundamentals. There's a lot of other things that can go into a stock's valuation. It could be macro effects, it could be indices being put into an indice, getting taken out of an indice. It could be algorithmic trading. It could be, day traders, technical traders, market makers just issuing, more shares than exist or covering short positions. So there's a lot of things that can affect a stock price that's kind of beyond management's control and is beyond fundamentals. Just sentiment in the industry. I mean, we see when ETH goes down, our stock price goes down. When ETH goes up, we tend to go up substantially more than the price appreciation. So as a company, we're doing what we can to get the word out in terms of why we're operationally different, as well as, why Ethereum. But I mean, if you look at the why Ethereum, it's 2 slides in our deck compared to most of our competitors are, 30 slides, because that's really all they have to talk about. And so, yeah, we're just gonna, time will tell, in terms of valuation. In the interim, we've bought back shares. I mean, I think I've invested between myself and my family over probably $750,000 this year into the company between participating in the convertible debt, buying stock in the open market, and then I had to, unfortunately, with Reg Show, I had to give it back to the company. But I'm committed as well. So
Appreciate that. And we have one last question, and we're just at time. And this is interesting. So, indexes, ETFs, they've increasingly been investing in crypto. One, have you seen that on your cap table? Have you seen them coming in? And then two, what is your perspective on this movement, and how does this impact the market going forward?
So, yeah, over the summer, we finally got to a size and scale where we could get inclusion into the Russell 2000, excuse me, Russell Microcap Index, which was great. We saw additional liquidity. I think index inclusion is very important for companies, just the way the market structure works. If you look at MicroStrategy and I think BitMiner, their whole take is let's get so big that we get forced buying through indices, and that's how we're going to drive value. For us, that hasn't really been the strategy because I'm the largest shareholder and I don't want to dilute myself. I don't want to be a multi-billion-dollar business and have the stock price stay where it's at. But I do think index inclusion is really important. Um, Right now, FTSE is not eliminating or removing DATs and crypto-focused companies from their indices. MSCI is in an open comment period right now until the end of the year. They're seeking to have I think it's a balance sheet threshold to remove companies that are more than 50% of their assets in digital assets. We've actually submitted a comment and a whole report to MSCI on how they should have a multi-factor approach to the exclusion of public companies from their indices, and they should include operating companies um, working or operating within the DeFi, or not DeFi, but digital asset ecosystem, compared to those that are just holding an underlying, commodity asset for price appreciation. Who knows if that'll move the needle? We'll be making that report or submission publicly available as well on. I'll probably put it on my X account. So if anyone that doesn't follow me on X, they should. It's at Charles_BTCS, and the company's X account is at NASDAQ BTCS.
Awesome. Well, I really appreciate it, Charles. This was a great conversation. We're at just about a minute shy of the conclusion of our call. Any last words before we conclude today's fireside chat?
Well, look, I really appreciate, the huge turnout on this call to take the time to listen to our story. I think we have probably one of the most interesting and compelling stories within the Ethereum ecosystem in the public markets. And we're super excited about where the business is going. And so, again, thank you everyone for your time.
Yeah, I appreciate everybody's participation. We did have a great turnout for today's call. Just as a reminder, the replay of the chat will be available on the IR section of the company's website. If you want to ask a question and we didn't get to it today, or you want to ask in the future, please contact us, btcs@kcsa.com. Thank you, everyone. Have a great holiday. Thank you.
Thanks so much.